All right, hello everyone, and welcome to the June edition of the AAA. That's the Ask Antoni Anything session. And today I'm joined by my co-founder, great business partner, friend, our very own Kalin Metodiev.
Hello everyone. Thanks for having me here.
Yeah, it's been a while since we've been on together. Kalin comes from a very diverse and intense background of investment banking, being a advisor on different M&A deals, on corporate finance. This is also the things that he has here at Nexo, the institutional part of the business. So in these times of volatility and market turmoil, certainly one of the best people to talk to about the Nexo business. And we're going to kick things off with your questions, but just to give you the overview, we are going to take a step back, have a look at the bigger picture, at the fundamentals, and why we think that Nexo is an example of things done right, why having a sustainable business model is fundamental, why overcollateralization, or at least collateralization to 100%, is fundamental, why prudent risk management is fundamental, while building a secure infrastructure with insurance is fundamental, while the global licensing effort is fundamental, something that I personally have been very closely involved with. And overall, how all of these investments that we made throughout the years now are paying off in an awesome manner. So let's kick things off with the first question that comes from Dom. It is addressed, I think, towards me. After unforeseen events, the Celsius network and other competitors halted some or all transactions on their platforms. What measures are enforced to prevent such a scenario at Nexo? Well, we briefly touched upon this in the intro. It is about the fundamental way we went about when structuring the business of Nexo. And this is not like something you can do in a matter of days, weeks, or months for that matter. It is how you build out the business from day one, and all the processes that we have and safeguards that we've put in place over the past close to 5 years now, right? At the core of our business has always the back of our head is the security of client funds. We know how hard all of you, well, not all of you have worked very hard to get those, but regardless of how you came about your wealth, you deserve to be protected. So we have designed the platform with that in mind. Early days, we started with our bread and butter product, the instant crypto-backed loans, and these were always on an over-collateralization basis because markets are volatile, and at the same time to be as inclusive as possible. As long as we know who you are, you come and deal with us because you have the collateral. We don't need to conduct credit checks, and in that sense it is a very much more inclusive product. So this is like an example of some of the safeguards that we have in place, the over-collateralization. Kalin can perhaps briefly touch upon risk management, how we go about our business and counterparty selection and managing that risk.
Sure, Antoni, absolutely. Risk management, I would say, has always been probably the centerpiece of our business model deployment. There are, of course, other competencies that complement the entire picture in our operating approach, but risk management is essentially the harness that has always allowed us to grow as quickly and as ambitiously as possible, but within the framework of the constraints that it gives us. For example, one of the things that Antoni has always mentioned on these AMA sessions or during his public appearances, that we are very dependent and very heavily involved in the building of our automation since day one. Every single aspect of our business is automated, so it allows us to objectively and without any further human involvement execute certain algorithms that protect the principle of Nexo's balance sheet and our customers' money. So one of the simplest things, and sometimes we have been accused by competition, by some unfortunate members of our community, that this particular aspect works in a very unforgiving way, but that's our margin calls, and ultimately during times of excess volatility, unfortunately liquidations on the collateral, that is part of overextended loans, those loans that have quite high LTVs. So in some, I would like to add to what Antoni said, that we always work on the deployment of our business model in the most professional way, with an uncompromising risk management. And by also one other thing that I would like to add is by adding team members that have specific qualifications, so that they always provide a synergistic effect to the efforts of the overall team.
Yeah, and this is, by the way, what sets us apart from most everybody is the automation part that Kalin just described. I'm sorry to say, but a lot of competitors, quote unquote, they still are using spreadsheets and trying to do things manually, and that's why when you issue time-based versus price-based margin calls, you can get in trouble, and that's how at least partially the current mess in the space came about. And moving on to the next question, it comes from, oh yeah, that's a tricky name to pronounce. I'm not gonna try and do that, not get it wrong. But did you get a response from the Celsius team? Kalin, prepare, this will be you. Okay. If you get a positive response, does that mean that Celsius is now under the control of management? And by the way, because I had a quick look at the questions, how they got upvoted, I know the next one is analogous to this one. It concerns FinBlock, so maybe you can incorporate that in your answer as well. Okay.
Well, I would like to start off my answer to this question by saying that, first of all, we would definitely, as Nexo, as a company, as a team, we would like to express our empathy to our community, to the entire blockchain space, about obviously the wealth destruction that we have seen here over the last few weeks. Obviously the macroeconomic factors have changed. The overall, I would say, optimism and inclination to direct money to our space, and then in general to capital markets, to a lot of assets around the world, has turned, I would say, 180 degrees. And from an overly optimistic state, the market has gone into a state of fear. And of course, some people might say that the result of it is that the pendulum has swung, too much in the opposite direction. So, some people are saying, that the correction has already been too much. We believe that, there is some visible volatility on the horizon still, and nobody can say whether this is the bottom, or, whether there will be a, we will see smaller market valuations. So definitely buckle up. And as an extension of what I was saying, we have always been very open to about our commitment to the growth of the ecosystem, to the healthy growth of the ecosystem. So we're always interested in supporting companies, partnering projects, strong teams that have a clear vision of how they can create an innovative product that will be demanded by the blockchain community, or even users of financial services around the world on a sustainable basis. They will have the correct pricing model for the provision of their services, and the project or company will have the ability to break even eventually and deliver obviously returns to its investors. So we have supported such teams, we have supported such initiatives, but at the same time also we have kept our eye on companies that have built a momentum in the space, but at the same time they're struggling still with the proper execution of their business model or with the financial metrics that can underline its success. In the recent developments that we have seen over the last few weeks, we have seen that some companies have gone into trouble for various reasons, and we have initiated conversations in a professional manner. This isn't, some sort of a, stronger competitor, feeling satisfied or overconfident because we're seeing, that some of the other players in our niche are struggling. It's exactly the opposite. We believe that the ecosystem needs help. Everybody is aware that contrary to established capital markets, there isn't somebody out there at the end of the line to save everybody when we get in trouble. There isn't a lender of last resort. More or less, we self-regulate ourselves to this day, while obviously we're very diligent and, thankfully, to Antoni and his team, with all the regulatory steps that we're taking. But in other, in other parts of the industry, unfortunately, everybody relies on themselves. And this is where we come in to provide, possibly a helping hand, and find ways to help, whether it's with advice, whether it's with the provision of liquidity, whether it's on the basis of the acquisition of certain parts of the business or the entire business. As a matter of fact, Antoni, we're currently looking at about 7 or 8 companies in the space where I believe we can be instrumental with turning things around and optimizing the pursuit of shareholder returns. So while I cannot speak in details about ongoing processes, I can assure our viewers and our community that we're very active on this front, and I only hope that when we extend our help, it will be received.
Yep. And just to sum up the overall situation, what Kalin was saying is something that I brought up on my last interview, I think it was Friday on Bloomberg, is, by the way, it's a notion that's picking up. So kind of proud that we at Nexo sort of kickstarted the conversation in this direction, is the fact that this is reminiscent of the 1907 banks panic. There are a great many parallels to that time, to the current state and development of the blockchain system. This was 1907, is before the Federal Reserve was established. I think it was in 1913 that they established the Federal Reserves Act, and they voted it on a snowy Christmas evening where most of the senators were already with their families, but that's another story. Point being that, early days in crypto, looking like early days in traditional finance, and essentially the panic that came out from the railroad sector in the US. JP Morgan and his pals, those bankers that were solvent, that were prudent, that were still liquid, they came about and self-regulated, cleaned up and consolidated the space, out of which grew the next wave of the dominant players of the next era, household name that still ring a bell today. JP Morgan Chase was then divided into JP Morgan, Morgan Stanley, and Chase Manhattan. These are like sort of the 3 biggest banks in the US. Can you imagine what was that like when there was one bank all under one roof? Times that are very much akin, and this is sort of what we are seeing in crypto play out. There will be consolidations, there will be different fractions coming together, hopefully for the betterment of the space. Certainly our intent, and this is how we are approaching this. I have refused to engage in any sort of trash talking of competitors. Regular watchers will know that this is the case, and now somebody is in trouble who has not refrained from that, and we still are doing the best in our abilities to help for the better situation of the overall space. But last but not least, the retail, which is eventually and unfortunately always getting hurt. It's not the guys with insider info that can move their funds away from any platform ahead of time. So moving on to the next question, please. How are you guys doing so well when others are almost liquidated? What's your secret to success? Asks us an anonymous person, and Kalin, you take the lead, and then I'll follow your.
Well, I mean, I will definitely say that there isn't some sort of a unique secret. We early on, when we devised our white paper, I'm sure many of our viewers, that also participated in our token sale. After the token sale, a lot of questions have been asked about the landmarks that were incorporated in this white paper. Will remember that the operations and the goals that we have pursued in these almost 5 years, as Antoni pointed out, are not different. Contrary to some of the players in the space, and I'm not only talking about the lending space, but the blockchain industry as a whole, they know that many companies have gone through one or even more pivots until they have figured out what their true calling is. For us, we have had a very well-defined set of goals and a very well-structured business plan how to pursue these goals. So all the pillars of the execution of our business plan that Antoni already touched on have been incorporated since day one. First of all, we pursued operations that were part of our professional track record until then. So we brought our experience, our know-how, our systems, experienced team members to the building of Nexo. We incorporated technology, we incorporated automation since day one. Our risk management approach, as we already touched upon, is something that is alike of the risk management systems that all banks operate around the world with. So while, as our viewers are well aware, we are in a very deep phase of the attainment of our commercial banking licenses around the world, we have operated as if we are a bank since day one. And I believe that this strong discipline and reliance on our expertise has been probably one of the I would say the core secret to our success. So while, as the question actually directs in that in a specific to a specific aspect, while others have been liquidated, it to me appears that just sound risk management policies mainly have not been in place. We have stayed true to our calling and to our procedures, and I believe that this discipline has been one of the most important factors for our success.
Absolutely, and another thing that I think contributed to our successful mitigation of risk is this refusal to yield to the temptation to do something just because everybody is doing it. Kalin was being very modest here, but I remember this prominent hedge fund that was last week in the media. I'm sure without mentioning it, you know who it is. They came to Kalin and the institutional lending desk, and they asked for an uncollateralized loan. And Kalin was adamant about our inability to lend to them, given their risk profile, given their strategies, given precisely what they had in mind of doing. And he was almost laughed at by them and similar market participants. It appears that Nexo is the only one who doesn't understand the interbank market of crypto. Well, fast forward 2 years later, it is a totally different story. So we have held ourselves together and in check the way that the enterprise has been built between the different departments, checks and balances, so that we don't get caught up in this cycle of financing long-term debt with short-term essentially depositors. This is something that always goes sour, whether it's long-term capital management in 98, whether it is the subprime a mortgage crisis of the late 2000s. It always ends up in tears, and us being good students and some of us being slightly older than other ones remember that well, and we have been good at learning the lessons of history and translating them to reality. There's the saying by Lloyd Blankfein, be an excellent interpreter of the present. And you don't need to see what the future holds, because managing the present properly is sufficient for you to be successful in life. Moving on to the next question. It is by a person named like me, Tony or Antonio. Hi, could you give us a sense as to the amount by which assets exceed liabilities? Thank you. Okay, just to give a little bit of background, because we within our own bubble tend to think that everybody knows everything that we ourselves know. But just to give you context, what Tony is referring to is our real-time audit that we pioneered with Armanino, and to this day I think we are definitely the only crypto lender to have real-time auditing of assets. I think Kraken copied us a few months later, which kudos to them. They got the memo that this should be done.
Everybody should do it.
Yeah, everybody should do it. I've challenged the industry to be better than individual and bring up to speed on that front. So we have this audit which is in real time by Armanino, and it shows on-chain cryptographically provable that our assets exceed our liabilities by more than 100%. And the question is by how much. I am in a position to say that these are triple-digit millions, and due to the volatility of the market and some constraints that we have on confidentiality and the legal side, I cannot disclose more, but triple-digit millions. So there is a big cushion which provides us the comfort to operate within these volatile markets. Moving on to the next one, it is for you. You guys increase the insurance on Nexo, but I still want to know how you manage risk and why you put such an emphasis on collateralization, asks us Rob.
I think this is a question that we've been asked many times, and of course we have never gotten tired of explaining it, but I believe that it's been covered on a couple of occasions this evening already. The most important thing, I have touched on, and Antoni also in part of his answers, is that collateralization is for us one of the most important aspects of our risk management. So when we lend to hundreds of thousands of people around the world, the reason why we have chosen to do this since day one is because we have the ability to geographically spread our risk, but also across various user groups and user segments. So there isn't an over-reliance, let's say, on the consumer dynamics and behavior in a particular, let's say, US state, or a particular Southeast Asian country, or just any country really around the world, or any region in this country, or even a particular town, because there's many financial services providers around the world that are geographically based and cater to a specific customer segment. For us, this was one of the most important considerations since day one. We want to make sure that the total resource that we have on our balance sheet can be spread as thinly as possible, and we're not going to be subjected to specific macroeconomic events that affect a particular user group or a particular geography. From that point on, the collateralization on the loans that we extend is one of the, I would say, more straightforward ways, an aspect that we can assess every single split second. Antoni has mentioned on a number of his sessions that we have this automated system connected to over 20 exchanges and liquidity pools, which pings every split second, every single one of these venues. It incorporates specific statistical aspects of liquidity, the depth of the order book on various exchanges, and it gives us, a slightly adjusted, but I believe crystal clear view of the market value of every single collateral that we hold for every single loan exposure to every single client of ours around the world. And this is, I guess, the direct answer to this question. When we have this over-collateralization and we know exactly what the LTV is, we have the ability in a fully automated manner, once again, to issue these margin calls to warn our customers, listen, it's time for action, because the market can move against you. And we make these margin calls extremely visible. Those of you in our audience that have received these margin calls can attest to it. Email, text messages on your phone. We don't want our customers to get liquidated. Rather, we want them to take action by either repaying part of the loan or adding additional collateral to bring it to a manageable and healthy LTV level so that we can avoid this ultimate threat, which is for our system to automatically liquidate collateral. So if I can use the session today, it would be to make this, to deliver this message to our clientele, to our user base once again, and say, please, regardless of the margin call level, make sure that in these volatile times, especially in the market right now, during this market uncertainty, that you keep your LTV levels at a healthier and relatively lower levels than your normal preference, to make sure that you don't get subjected to sudden volatility, congested networks. People are trying to take action, but unfortunately they don't have the time to do it. So let's avoid these occurrences as much as possible.
Absolutely, and our systems have been stress tested like no others. In 2018, Bitcoin lost 86% over the course of the year, so a gradual decline. In 2020, pre-COVID, in March, amidst the COVID, I will have to correct myself, Bitcoin lost 47% intraday, so sharp decline. Same thing happened last year, 2021, around another China-related Bitcoin ban of, I forgot some of what exactly, but it was, a huge intraday decline. And we as an entity did not lose $1 because we have this fiduciary obligation. We have people that are earning, we have people that are borrowing, and when times get ugly and markets get volatile, we have this fiduciary obligation to balance out the interests of those two groups, and we have done one of the finer jobs of doing that. Why did you say you are the only lending platform not to have been hacked when a director of a competitor has told me this to be specifically untrue? Why? Asks us Jamie. Well, Jamie, I challenge anyone who claims that we have been hacked in any way to show proof of that, because this is quite blatantly gossip. And we don't engage in gossip. Nexo has never been hacked, and given the amounts of both in crypto and in dollar value that we hold within our volume wallets, believe me, people have tried and they have failed. And I don't want this to challenge like all the ill actors of the world to be on alert, but believe me, if there were exploits to be exploited, they will have been exploited. This is the truth of it. Whoever claims the opposite should provide evidence.
Maybe just two things
Sure.
that I wanted to quickly add here. Number one, please guys, let's do our homework. When we try to assess market conditions, when we try to make our investment decisions, when we try to form an opinion about something that happens in the market, I urge you to always double check your information and try to verify it from numerous sources. A director of a competitor, probably not the most objective voice of opinion out there. And I would, again, of course, we will give you our honest and transparent answer here, but at least try to find other ways to verify it. We receive a ton of information every day from the community, from our users, also from members of competitive teams. Believe me, we never take anything for granted and 100% face value. We always put it through numerous other ways to cross-check it and make sure that we find the as much objective truth as possible. But the more important aspect here is the following, and again, it goes back to our business model, that a number of our competitors, have declared openly in the media cases where they have been hacked because they had the need, they were urged to go and deploy assets on other platforms, especially in the DeFi space, without having the ability to verify the security of these platforms. They were in a very, I would say, desperate need to find sources for yield generation. On our end, when you have a sustainable and working business model, when you have global demand for our crypto-backed loans, this gives us the ability to stay within the confines of our system, of our platform, and worry about the protection on multiple levels, both software and hardware, against hacks. But we have this confidence because we do daily checks and rechecks to make sure that all, even theoretical holes are plugged, and then we don't have to worry so much and keep our fingers crossed that if our business model didn't deliver the results and we were forced to look for opportunities elsewhere, then obviously we will be subjected to non-market risks. And I believe that this is one of the first questions that you should be asking other platforms, wallet providers, custodians, when you go and do business with them, is about security. And do your homework over and over and over again before you deploy a single dollar there.
Absolutely. Hi, Antoni and Kalin. Could you please explain how Nexo generates yield and distributes its earned products? Are high yields sustainable in the bear market we are in? Asks us Oleg. Would you take the first part? Yeah, sure.
Well, Antoni opened today's session with it. Our signature product since day one, since 2018, early 2018, has been fully collateralized crypto-backed loans. When we source liquidity from the market, from various segments in the market, whether it's our also signature savings product called Nexo Earn, whether it's our arrangements that we have with various companies, corporate treasuries around the world, and last but not least, of course, in terms of volume, our institutional counterparties, we use this liquidity mainly to satisfy demand that comes around the world for loans that are extended to our customers that can back up these loans with the acceptable cryptocurrencies on our platform. This gives us the luxury, this gives us the stability to rely on the soundness of this core business model, and then we are not tempted, as Antoni also pointed in one of his earlier answers, to look elsewhere for answers. Of course, there are answers, and we have the ability to explore some of these answers as the market develops and as it provides to us opportunities that may have not existed even in 2018 and 2019 when liquidity in the markets was much weaker and we didn't have the ability to take advantage of it. For example, there are numerous market neutral type of solutions, some are well known, like the traditional carry trade. It was obviously something that was available for everybody's use last year, for example. There are other approaches related, for example, to our advanced trading capability. You're well aware that we recently announced our prime brokerage platform. So if you have a lot of parties trading on this platform that aggregates an order book from numerous exchanges, we have the ability also to provide market making layer of services on it. On one hand, to narrow the trading spread, which is something that everybody benefits from, but on the other hand, to also pursue returns from these operations that are provided on a risk-free basis. Revenues from trading, obviously, on this exchange, revenues from other services that we are providing more and more on the institutional front are those kind of, this represents the core of our revenue generation. And on the other hand, the strong automation and our very disciplined approach to how we expand our OPEX structure, meaning that we don't expand it beyond limits that will endanger our operating and net profits, is something that is key in our operations.
Absolutely. And I'll take the second part of the questions about the sustainability of high yields in the current environment. It's a tricky question because I understand it pertains to the crypto space. We can have a bigger conversation of traditional finance and we can have an entire episode on it, but in crypto, nobody truly knows, but my personal guess would be the following, that there are, due to some challenges that some companies will face, they will be forced to offer higher rates, sometimes even rates that seem exorbitant, that seem irrational, that do not make sense, in a rush and an effort to keep the lights on, so to say, and to avoid insolvency. People will be forced to borrow at higher rates, so you will be bombarded with interesting and high yield products. Interesting in quotation marks, if the irony wasn't clear here. And then at the same time, due to less perhaps ability to generate the yields, those providers like Nexo, who in order to pay you, let's say 6%, we have to go out and make at least 8% to make it all work and economically sound and sustainable. Those platforms and service providers, by no means the only good guys out there. There are notable other exceptions to the general trend that we discussed earlier. Those type of platforms will perhaps offer lower rates over the next couple of months and even years, but this also goes back to what we talked about, the sustainability of the models, the safety, the soundness of the business model. And at the end of the day, it is better to have a lower yielding but more secure product than prospects of double-digit yield that will result in a 100% loss for you. Moving on to the next one. It is for you, Kalin. It comes from Marco, and he's asking, how is Nexo's financial situation? Can you breach 2 years of bear market? Thank you, Marco, for letting us know that the bear market will be exactly 2 years. Kalin, over to you.
Well, I believe for the most part this question has already been answered, and I hope that Marco is wrong here. I hope that the bear market lasts less than 2 years, because obviously it's not fun in a bear market. As Antoni pointed, we are known for not gloating about our strong competitive positions in many aspects of the business. We understand that this market is devastating to a lot of companies, to a lot of young projects. We are very well aware on the basis of our strong presence in the ecosystem through our venture capital fund, how many ambitious and skillful teams are there that are actually imagining right now and building and ready to deploy new innovative models for provision of services, not only financial services, but various new solutions in our lives. That those projects are currently endangered. It's questionable whether they will find the proper support over the necessary period of time to make sure that these products and services are finalized and they can be offered to the global community. I think that these are definitely challenging times, but at the same time, as Antoni pointed out earlier in one of his answers, we have this tool on our website which presents in real time that our assets exceed our liabilities. So it's not just our opinion here; it is basically readily verifiable on our website that we have positive net assets, positive equity, which makes us actually one of the strangers in this industry, and together with the fact that to this point we have not had to rely on any equity raises to support our growth and to fortify our financial position. So I would say that if you just look at these two aspects only, and we don't make this a very lengthy answer, you will do a decent homework in verifying that we have a very strong financial position that not only testifies to the viability and strength of our business model, but it also gives an indication about our ability right now in this market to emerge stronger, to help some of those possibly that need help in the industry, but at the same time also to use the opportunity to consolidate more of our business and to help provide on a wider user front service that makes sense and that our customers can feel happy but also secure with.
Yep, and I can't help myself to add a little something here. Also, the business model of Nexo, it is by design such that it works in bull markets, it works in bear markets. Obviously, we prefer a steadily rising market, like every investor out there. But our model has proven during the lengthier market of our first year of operation, nonetheless, that it is one that also works in bear markets. Moving on to the next one. Next one, there it is. Jürgen asks us, I believe Nexo can be the Amazon of crypto lenders. Do you agree? And what is needed to evolve further? Okay, well, that's a great question. And thank you so much with that comparison to Amazon. We truly appreciate it, are humbled by it. And of course, we think you're right. I rewatched an old Jeff Bezos interview, or might have not been that old because he apparently was already famous at that time, but he said he had a very simple vision of Amazon. He wanted to make an online bookstore, and if you look at his original business plan, very simple. Same thing with Nexo. We wanted to devise a platform for instant crypto credit because we as users needed it. Our co-founder and the guy who originally came up with the idea of Nexo, Costa, he needed it because he had a bunch of Bitcoin. He wanted to borrow against it so he can buy more Bitcoin. These are the ways that the greatest products are built out. Point being that you have to have a very clear vision and you have to grow organically and you have to grow according to the needs of the space. So what is next? It is whatever we see that the market wants. Right now we're seeing this consolidation phase. We are seeing that sound business practices, cash flow, and pedestrian things like that in the crazy phases of the bull cycle do matter at the end of the day, and you have to be responsible. You have to go back to the fundamentals that we talked about: prudent risk management, overcollateralization, licensing, security of the ecosystem, and all those things that we talked about today. They matter at the end of the day, because you cannot be consistently on the right side of things without them, whether it's a bull market, whether it's a bear market, whether competitors are going insolvent, unless you have those in your corner. And we do. So we do think that we are in a good position, as Kalin said, not to be gloating, not to be happy, because real people with real savings are getting hurt. So this is no time to be to exhibit hubris or arrogance or any of those characteristics, but is to put your head down and work diligently on improving the space. This is what for me lies ahead. Be the good interpreter of the present, so that you be among tomorrow's victors.
And I would like to add something that not only we have been thinking about at the senior management level at Nexo, and we have been discussing for a while, but I think it's only natural. It's not natural only for the blockchain space. It's been natural in the history of humanity. Societies have gone through such transformations. Cultures, music, taste for fashion, for example. There's always some sort of a consolidation, and people tend to very quickly direct their attention, their efforts, spend their time, spend their money on solutions in all of these areas that make the greatest sense, whether because they're the most user-friendly, they're the most appealing, they're the most sustainable, they're the most eco-friendly, for example, obviously, stay with the modern trends for sustainable investments and so forth. But there's many different aspects why certain solutions work better than others.
Nothing works better than ours.
And my point here is that I believe that the blockchain space is still young, but at the same time, a number of years, have obviously, rolled since the publishing of Satoshi's white paper, and then the early years of just buying and selling, let's say Bitcoin and Ethereum, then obviously all the altcoins and the solutions that came with them. But recently, especially in light of this market implosion, unfortunately, we're having more and more interesting conversations, not only with customers and with speculators, with traders around the world, but also with business owners. And I'm talking about the big institutional owners of businesses in our lending niche, but also in other areas, which are becoming convinced that some of the business models that are deployed by other companies just don't work. Either they don't have the same level of execution, they don't have the same level of readiness and know-how. For some reason, the inner mechanics of the business development and deployment don't work. And last but not least, just some bad managerial decisions have been made. So I would like to share with our community, and hopefully other communities will be exposed to this information as well. I believe it's high time for communities to just deviate from this model of being uber loyal to a particular company, project, token, and just start looking at the bigger picture and start evaluating by thinking logically. If we have given this much time to a particular project, it hasn't delivered, It's pivoted a number of times. Every single time the pivot is not successful. At the same time, it's burning through some heavy cash, to make something successful. Isn't it time that we consider that there's perhaps somebody better positioned and have a deeper setting into how to make this happen, to basically pass the baton to, and to make sure that, again, a more experienced, more tech-centered team can come and take over, and basically help our community. So I think that while we absolutely, again, we sympathize with many of the communities and investors that are decimated by the recent developments in the space, we would like to deliver a message to you. Be more vocal within your community. Be more, ask harder questions to those that are leading the companies you're invested in, and basically say, isn't there a better way? If we like this business model, if we like this community, isn't there somebody that can come and help us? So consolidation, whether we like it or not, is coming to the space. It's been there, but these kind of market developments that we're seeing right now, they only accelerate these developments. So I would suggest, let's work all together to figure out how there could be a quicker and more orderly procession and discussions, collaboration towards the emergence of these Amazons in various aspects of the industry. Because the world doesn't need 20,000 blockchain projects. There aren't going to be 20,000 successful business companies in this space. There will be fewer, but at the same time, they will have a much better alignment with the regulatory climate. They will have a much better readiness to execute a sustainable business model. They will have the necessary degree of automation. They will have the experienced teams, and they will have a happy and healthy community to take advantage of the products and services that they will deliver to the world.
Well said. And I think that is a suiting end to this session. We thank you so much for participating, watching, giving us your questions. I thank Kalin for joining me today for what I hope was a most informative session, and some of the inner workings on the institutional financial side, on the sustainability of our model, our operations. And during these volatile markets, be careful, tread carefully in these uncharted waters, and I'll see you next month.
Stay safe. Thank you.